I have been maintaining that the upheaval and the volatility in the market is going to be quite it's something which everybody has been really scared of. And I think this possible trend may continue for some more time. That is what it looks like. Though maybe in the last couple of days, we have seen that with the help of the FI support, the markets have been holding steady. But I do suspect that the volatility will continue. And possibly from the current levels, I think the way the markets have risen almost perpendicular without giving any correction, say for today, I think on the upside, maybe I would think that there is 150 point of rise on the Nifty, but on the downside, possibly a 400 to 450 point correction over next 3 to 6 months. So I would play a lot more cautious because ground realities really have not changed. Maybe some statements have infused some kind of confidence. But I think the problems still remain the way they are. Not that they're so overwhelming as some time back the way the markets had given off, what to give in to understand. So I would still play cautious from the current levels, and I think stock specific would still be the best possible approach to this market.
So what would be a portfolio call then? What stocks would you buy?
I think broadly, maybe what I would look at is something like the MNCs at the moment, particularly those MNCs which have been beaten down because the buyback did not happen or did not happen at those possible rates. They are trading at a new lows or close to the lows. So I think there are quite a few MNCs out over there, though they may not be very, very liquid names, but all the same they have also corrected very significantly. So that is one space which probably we'll be looking at. But otherwise, I think on a stock-specific basis, maybe we would still look at a Larsen & Toubro, we would still look at a Britannia, we will still look at something like an ICICI Bank from the current levels. So I would still go with the known names to play this volatility, and maybe in this there would be a bit of a defensive approach to navigate the volatility.
All right, just a bit of prediction.
Sure, I think there is no doubt that this volatility has been pretty unnerving for anybody, and this rise too has really caught most of the people unaware, and I think not very many people probably have been able to participate also because there were skeptics at every rise, even I am included in that. But by and large, I think one issue which I think possibly may surface is at this level of index, I think that the retail investors possibly may go in for fresh redemption because 5,800 to 900 of Nifty is a very reasonably good level for any mutual fund investor to think about, and we have seen redemptions happening at those levels. So I think that is one possibility that may happen. And even I also feel that this market beyond this level of say 5,800 to 900 is a level to at least partially book profits and be out and wait for a reasonable correction to happen so that one can get some of the stocks that they want.
Okay. Sudarshan,
well, I think what I understand is that the Chinese steel prices also have softened. That is what I understand. Well, I think from the lower level, it has really given a good rise. So from the current levels, I'm not too gung-ho on some of these metal stocks. Possibly, if you're a smart trader, maybe you can buy from the current levels and maybe make some money. But I don't think that that would really be a great idea. Specifically on some of these commodity stocks, it's very difficult to take a secular call, and I'm not really great at predicting the short-term movement of some of these stocks. So I would really stay away from that.
All right, Dilip, I'll toss the same.
Them and pay off the debt and the interest. So I think this sell would perhaps reinforce some confidence that maybe Jay Prakash Associates will probably continue its decision about selling some of the assets and in the process trying to survive this current debt crisis. And I think as far as the consolidation of the cement is concerned, I think Ultratech Cement really has got it at a very good rate. But overall, possibly as they try to increase their efficiency, I think on an EV basis, though it is very attractive, I think as they have to improve the efficiencies, overall impact for Ultratech will be, I think it will be EPS dilutive. for at least a year or so. But net, I don't think people are really worried about that. I think most of the cement companies are generating good amount of free cash, and that is what is really mattering at the moment, and which is why some of the cement companies are getting very good valuations. So in that sense, I think it will be good for Ultratech Cement in the long run. Maybe in the possible short run, there will be some pain.
All right, it's pulled back quite a bit. Let's see the intraday chart of ITC. That's a stock which is now up about 2.5%. It has the highest weight on the index, and at this point in time, looks like there's a big buying that's resumed on ITC 338. Sudarshan, any chart check on ITC? I mean, how's that stock looking now?
No, ITC is a buying opportunity. We don't go and short.
There are so many controversial issues surrounding these stocks. So I think at best probably some of these stocks can be traded if one is on the right side of the news. But otherwise I think it's better to avoid some of these stocks at the moment, because there is no clarity and it's very difficult to take a call on this unless the clarity emerges. And I think there is still some time away before the clarity emerges on any of these stocks.
Okay, well, the point was that the surplus coal for Sasan was what Reliance Power was planning to divert, and what we now understand is that Tata Power has written to the Planning Commission asking to divert the Odisha coal block coal to their Maithon power plant. So perhaps if both are agreed to, it could be
Lata, everyone is trying for that, because as you have said, for the Reliance Power
market, it gave you a decent rally. Are you still in buy mode at all in any sector?
Sure, as what I said some time back, that maybe on a stock specific basis, we like some of the stocks which I just mentioned. Maybe it was Britannia, I think, which is what.
Okay, got that. I mean, I was just wondering if beyond the rural theme, you were looking at, some other stocks for their export orientation.
Well, I think on the export orientation, maybe not very specific, because this volatility of the rupee, as what I understand, really is very harmful even for the exporters, because nobody can really put a particular value to it at the moment. So it really hurts them in the short run also. But I would still play some of the second rung IT companies like maybe KPIT Cummins, or maybe Mindtree, or maybe even NIT, because all these three companies have a solid ROEs, they generate good amount of free cash, and more important, they are really available at very reasonable valuations at the moment.
Mr. Tulsian, before we get into the last stretch of trading, Bharat Forge, actually that has been one of those stellar outperformers since early August.
largely because of the export presence, and if you really see I think the remuneration.
I think both of them possibly would still merit a look more out of a defensive buy rather than any great proactive optimism on that on the performance front, because the markets are going to be so volatile. But I think net I would still say that you can still expect that ITC at the bottom line will continue to grow at 18 to 20% and will still deliver ROEs of more than 35%. So I think these kind of stocks possibly are always looking at when to buy. You may just postpone your decision to buy somewhat, maybe if there's some reasonable correction. But both the stocks would remain very strongly on your radar to buy. The question may be when.
Mr. Tulsian, is the pullback over for ONGC? I mean, it rallied about 20% from lows. Do you think time to maybe take some profit home?
No, Anuj, I think that maybe the diesel price hike, which is still pending, I don't think that has been, has been given up by the market. Still it is very much open, because the kind of rupee volatility is probably will again force the government for that, and that will be the positive for OMCs and ONGC, because both will then give them probably a rise of about 290 or 292, where one should really look to exit from ONGC. Yeah.
All right, Mr. Tulsian, Sudarshan and Dilip Bhat, thanks a lot for taking time out and talking to us. That's, of course, the market closing. 212 points down on the Sensex, 62 points down on the Nifty. The Nifty closed right at 5850, so that was quite interesting. It managed to recover in last 15 minutes of trade. We'll take a short break and come back with more.
Closing Bell, brought to you by Sony Bravia 4K. Experience